Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. I'm going to give you my financial opinion here. And if you guys have any questions or anything that you want to learn about commodities, you can check out my website, finding-value.com, the Platinum membership, and you can get a discount using the word discount in the coupon code. So let's dive in. I'll give you my financial opinions on what's going on. We're going to start with the dollar, yields, precious metals, and then commodities and ETFs that I follow. So we're going to start with the DXY. The DXY, again, the overall larger picture momentum is to the downside. We are getting short-term buying pressure of the dollar. Now, if we increase monetary tightness, if we increase interest rates at a greater rate than, say, maybe 0.25%, we could see the dollar strengthen. If we're at 0.25%, I think everything's kind of priced in. And if we're below 0.25%, we could see the dollar weaken with whatever decision, I guess, Powell and the Federal Reserve makes. But overall, the monetary conditions, at least from what the market's been pricing in, is a lower interest rate increases. And I think we're going to see weakness in the dollar. And remember, this is mainly just monetary tightening conditions against other currencies. So if the dollars, we'll call it looser in their monetary conditions versus the euro or the yen, then we would see a weaker dollar. If it's tighter, then we're going to see a stronger dollar. That seems to be the path that the dollar's taking. Looking at the 10-year yield, it's slightly higher today, 0.97%, so about 1% higher. But we've mainly just been moving sideways the past 2 weeks or so. Bond prices have also been moving sideways in a channel here. You can see that the past couple of weeks. And then the 30-year yield is also slightly higher, but for the most part, it's just been moving sideways the past few trading weeks. The TYX to TNX ratio, again, it's been in a channel kind of just moving sideways here. So that yield curve isn't really inverting anymore, and it's not necessarily, we'll call it normalizing either. It's just going sideways. And I'll say this in general, when it inverts, we've got an inverted curve, increasing interest rates, money flows into oil and natural gas and all those types of things from a monetary perspective. When it goes back up, that's generally good environment for precious metals. Right now, we're basically just going sideways. We're not really moving up or down. The curve is not inverting or uninverting. So it's kind of in neutral territory. The CRB index down a little bit today. We were down in crude oil. We're still looking good. We're still above this trend line. And everything is good for a potential move higher as long as we stay above that trend line. The CRB to S&P 500 was strengthening today, means commodities were outperforming the S&P 500. It is moving around. I could redraw this perhaps on the lines of this kind of going on here. It could be more of a channel that we're seeing. Right now, we'll see. I'm not claiming to know where this ratio is necessarily going to go in the short term, but I do think in the longer term, when this pullback is complete, I do think we're going to head higher where commodities will outperform the S&P 500 given the correct market conditions. And the market conditions, usually when you get an inflationary type movement, these really surge higher. But it does look like we're putting in kind of a double top in the short term where we could head back. And usually you get this move higher, you get a large selling off pressure, then you get a lead-in type pattern. And we're probably close to being done sometime soon, given that pattern or fractal and how that plays out. And obviously I can show you different fractals and how this looks like. Ethereum's got the same type of fractal on a much more grandiose picture. Looking at gold, so we had a slightly stronger dollar with slightly stronger yields. Gold doesn't necessarily like that. So we were slightly lower today. Slightly higher dollar, slightly lower gold. So that's matching up fairly well. But again, that's the DXY, which is a relative strength indicator, not an absolute strength. But slightly lower in gold, flat in silver for the most part. We're still within that pattern. And platinum is flat. You can see it start to turn around in platinum very soon. Look at the XAU to gold ratio. The ratio is slightly lower today, down 1.2%. We're still above this support level. So that's the support level there. If we zoom in, we're still above it. Everything looking all right. GDX down 1.5%. Same with SILJ, down 1.5%. Not really much to say here. Short term, we're just getting some pullbacks. We're at resistance for SILJ. For GDX, we're still above that support level. Everything looking all right. We're just slightly down today in both of those areas. Crude oil down 2.5%. It's not the end of the world here. I think that we're just doing a retest move. So we've got the trend line going through. I think that we could potentially even reach $76 if it wants to get down there. And even if we dip a little bit below it, and as long as the support holds, it could go even lower than that, which is a possibility. But I do think that we'll find support somewhere in that $75, $76 range, and hopefully we get some support there. Natural gas is still lost. It is still trying to find that bottom, and it has not found that bottom yet. As you can see, we've had a massive selling pressure move in natural gas to the downside. And we have seen these before in these natural gas prices. And that's what these bottoms have looked like. If we were to kind of go back and look, we kind of come down, get a little bit of a hump bottom, and then a nice big bullish engulfing. We've had another big move here, and it was a similar thing. We kind of slowed down a little bit, got a nice big bullish engulfing there, and put in a double bottom. So, looking at the bottoming patterns that we've got in it right now, we have not seen that bottom yet. We do not have any reversal candlesticks, and natural gas could go even lower than where we are today. And that is definitely weighing down the equities in natural gas. So looking at XOP down 3.23%, we've got a broken down trend line here. And we're getting a little bit more selling pressure with that weight of natural gas and oil selling off today. Overall, though, 3.23% down on a 6% and 2.5% down move in crude oil and natural gas isn't too bad and isn't that unexpected. Looking at OIH, the energy service company, is actually faring quite well, down 0.85%, with the oil and natural gas prices being down more than that. We are above support, and OIH is it's not looking too bad. If it wants to load, it's not looking too bad. We're right above support. That support level goes all the way back to this support level down here. So support and resistance on both sides. And to me, it looks like it's doing just fine. Looking at the Sprott Physical Uranium Trust, basically just sideways today. There we are, just sideways. Could it be a bloody nose? Could it be a continuation pattern? We'll find out tomorrow. If we continue higher with good momentum, that's going to be good. I do think that the overall markets weighed this down today. We could have had even a better day if the overall markets cooperated, but the overall markets were down today, and I do think that it dragged down this very strong sector to some degree. URNM also doing quite well today with the overall markets going down. We do have some selling pressure with that wick at the top. We have broken out of this downtrend line, and we very well could move around before heading higher. Maybe we just rip it. Depends what the overall markets do. And right now, we do have a little bit of selling pressure with that wick at the top, breaking through there and getting a little bit of selling pressure. TAN down today with the overall markets. I still think this looks good on a long-term perspective. Could it come back a little bit more? Yeah, it could. But it still looks good. COPX getting a little bit more selling pressure. We were talking about a potential pullback in copper and COPX. We had a massive move here from this bottom here. We went from $26 to $42, which is a very big move. Downtrend line, break, and a move higher. Now we could get a little bit of a consolidation, break that, and then move up again. We call that the stair-stepping pattern. And we could get a little bit of a pullback here. LIT also pulling back a little bit with the overall markets. Not a reversal candlestick really, but it is a down day. REMX slowing down its move higher. We have broken out above the trend line. This could be that return move that we're going to get, and we'll see what happens the next couple of days. SPX getting some more selling pressure. We are above the trend lines. So we're above it, and a lot of the times what happens is you break out of it, you break out, and then you do a return move where it returns back to the breakout, and then we break higher. So that very well could be what it's doing. So we had a down day in the SPX, we had a down day in the NASDAQ, which also could be doing a little bit of a return move. Again, I don't know exactly where it's going to go, but this could be what it is doing. EEM also selling off 2%. And we're just moving down a little bit with the overall markets. Still looks fantastic from a longer term perspective of a broken down trend and an eventual grind higher, I think. XHB, the housing market. And overall, it doesn't look bad at all. We have it's not really a bloody nose, but it could be considered that because it's a very small opening and closing price. It's not a reversal candlestick per se, but we're still above support, and that's that support level. We're right in that general vicinity of support resistance, and we'll see if we can break higher over time. Again, it's highly going to depend on what Powell does with interest rates because the housing market is interest rate sensitive. Looking at MU is also slightly lower today, not a reversal candlestick or anything like that. It's just down day. Copper, we are getting a little bit of a sell-off. I do think this could go down a little bit. Looking around at support levels, we've got a strong support level right at $3.80. And above it, we're basically coming into this resistance area right above it. So I think that we're just running into resistance. You can see on the weeklies, it's just two small little weekly candlesticks. At least this week, it's still a small candlestick. But we're coming into this resistance area. And that's really where we have to break through. So we came up, hit our head, and kind of bounced back, and maybe we loop back around like that. Something on the lines of that is probably what's going to happen. Lumber is still looking actually quite tasty. Nice strong day today, nice strong finish. And lumber prices were strong today. Very nice move, and we've broken out of this falling wedge to the upside, generally indicating lumber strengthening is a sign of the economy strengthening and potentially a sign of new homes being built and home builders needing more lumber. We've still got, I don't know why this isn't updating for me. This is, even though I hit the refresh button here, that hasn't refreshed. Nickel up 2.5%. So what we did here is we basically came up into this corner here. You can see these guys where the buyers and sellers equaled into this corner, and it popped out to the downside. And now we're starting to run higher. Are we going to get an ABC correction out of this, or are we just going to start to run higher? That's yet to be determined, but overall, my viewpoint is higher in the long term. Aluminum down slightly. Again, this is an inverted shoulder, head, shoulder, and we've broken to the upside. Sometimes they do a little bit of a move sideways before moving higher, but aluminum still looks really good. Looking at the Baltic Dry Index. Baltic Dry Index has also got a little bit of that natural gas fever, I guess, where it's just going lower, maybe not to the same extent. But I do think Baltic Dry Index with a falling wedge, that's generally a bullish formation. Rarely do I see this break out and actually stay down. So I think what's going to happen is that we're going to get a false breakout to the downside, which is what we're putting in, and it eventually will rocket on higher in a slingshot fashion. Now, Newcastle Coal, I saw this thing dove down quite precipitously. I like that word, precipitous. But looks like we've broken to the downside. That's a clear move to the downside there. And coal has broken to the downside. It is following natural gas over in Europe. And we could see further downside pressure with the weather being warm and all that. But I do not think that the underlying structural problems in the market have been solved yet. So whenever this stuff turns around in coal and in natural gas, I think it will be a very large buying opportunity when that does occur. Then we've got Ethereum. It is heading a little bit lower today. Let's go back to the candlesticks. And we're right inside this pattern. So we're still in this pattern that I drew in real quick. And we're back inside of it. Just like Jurassic Park, he goes, oh, we're back inside the car. That's kind of how I feel with a lot of these patterns. Same thing with Bitcoin, getting a lot of selling pressure. So perhaps we'll call it the enthusiasm around some of these sectors is starting to wane, and the reality that maybe Powell might be a little bit more stern than what we had perceived before, at least the markets had been pricing in. And we're going to find out. We're going to find out over this next week where we're going. I think the Federal Reserve is going to follow whatever the overall markets do. And that's basically, if we were to look at it, it's the 2-year yield. So it's it's the 2-year bond yield. Where is that? Let's put in 2-year US. So it's US 2-year. I think they're going to do whatever this US government bonds 2-year yield is going to probably do. That's kind of what most people. So we've had the big long-term breakout here, and then we're getting a little bit of relief here in the short term. You can see this just go sideways. So I do think that the 2-year yield is just going sideways. It's probably looking for maybe no change or a very small change in yields. And that's what the 2-year is kind of telling us. And that's probably what the Federal Reserve is going to do. So it's probably going to be sideways or a quarter point or something like that. But, I mean, we'll find out. And I don't think, even if they raise a half point, we could see short-term selling pressure. Yeah, I get it. And then I think the markets will price it in, and then we'll move on from there. Commodity bull market's still strong. We're going to get pullbacks just like we are right now, and especially large pullbacks. I didn't think natural gas was going to get this cheap. I'll be honest there. I thought we were going to stop around the $4-ish level, somewhere around there. But we're actually heading lower. I think it's a buying opportunity when this thing bottoms and starts to turn back up. Always buy into strength, in my opinion. And that's what I'm looking for. So that's what I've got for today. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. Definitely check out the website. We have a platinum members. I just released the question and answer session video. You can check that out as well. It's posted all my previous ones. And that's what we've got there. So definitely check that out. And we'll catch you next time. This is Finding Value.